What is going up, guys? Liquid Levy, and we're going to do another little educational video. This one is going to be on terminology. So you always see sometimes some abbreviations: PO3, DOL, BPR, PA, OF. It's not OnlyFans. So I just want to run through the big ones that I use and what they mean, and maybe show an example real quick. So the first one is BPR, and it's balanced price range. What that literally means is when you see price moving in a very well-fashioned manner. And what I mean by that is it's not going all over the place. It's not bad PA where it's barcodey. Price is moving in one direction, bullish or bearish, with order blocks, with the occasional fair value gap, and it's being respected. Just normal, good, respectful price range. That's BPR. This is not an example of BPR, really. This is more LRLR. BPR would be a little bit more like this, a little more like this part right here. That's nice. BPR. This is BPR. So this isn't so bullish. This is more of just like accumulation, again, an overnight. But you get the idea. So BPR, it's when price is moving in one direction, bullish or bearish, and it's doing so in a respectful way. So you're getting a green candle, red candle. It's an order block confirmed with another green candle that closes higher than the red candle. You're getting the occasional push up with a bullish fair value gap, and it's being respected. Okay, BPR. BOS, break of structure. That's just when you have, I hate to use it in its definition, but a break of structure. So anytime you have a trend line and it breaks, that's a break of structure. So anytime you see this right here, you could draw a trend line here. And so this is the break of structure. Whoa, what is, okay, well, we have a lot of vocab. So break of structure, where it breaks out. This is a break of structure right here. Little break of structure. And change in state delivery. CHOCH. So that's BOS. So you got BPR, BOS, break of structure. WO, weekly open price. That's pretty self-explanatory. DOL, draw on liquidity or draw of liquidity. That means where is price pulling from? So the draw on liquidity is basically like your daily bias. It's where you see on a higher time frame where price wants to be pulled into. So the draw on liquidity is probably up in here right now since we had so many 4-hour bearish candles and there's fair value gaps in here. So the draw is probably bullish. The draw is up into premium. Everyone get that? All right, moving on. IFVG, inverted fair value gap. We've been doing that a ton in class. So basically the example, there was a great example today. Oh, it was the hourly, excuse me. This one right here. That's a beautiful IFVG. IFVG here on ES, even more picture perfect, where you get the one fair value gap, and then this is the IFVG, this bullish one that is inversing, closing over the full body. Okay. Fair value gap. So IFVG, FVG, HTF, higher time frame. That just means if we're on the 5 and I say go to a higher time frame, or go to HTF, or if I say in the notes, I was looking on a HTF for the draw on liquidity, the DOL, then that means that I was going up to the 1 hour, the 4 hour, etc. So that's HTF. KZ, kill zone. We'll go over kill zones. It's kind of like a lesson in its own. LTF, lower time frame. MMXM, so SM or MMBM is market maker sell or market maker buy model. And that's just the PO3. That's the power of 3, so more abbreviations. And that's where you get accumulation, manipulation, followed by distribution. And that's how we trade. We trade the distribution. that's a little digression. But MS market structure, I don't really use that one. New York, NY, go figure. OB order block, we know what order blocks are. Check out the class. We'll do a separate study on just order blocks. OF, order flow. Where's order flow going on a high time frame? It's going bearish or bullish. You know, you want to trade with order flow. PA, price action. PDH, PDL, previous day high, previous day low. Again, PO3 is the power of three. It's the accumulation, manipulation, followed by what we trade, the reversal with the big move distribution. POI, point of interest. Everyone should know that. I like NWOG, new week opening gap, or NDOG, new day opening gap. That's when we open up, you know, on Sunday night at 6. Did we gap up or down? We did this past Sunday night. RR, risk to rewards. When you see my trades and you see that I have like a 3 or a 4 or whatever, RR, that means in the case of it being like a 3, if you risked 100, then you received $300 in the market. That's what the risk reward is. SMT, smart money tool. SL, stop loss. That's a big one. We use that a lot. TP, we like to use that one a lot. Take profit. And LOD, low of day. HOD, high of day. Those are obvious. OVN, overnight. Don't really use that one too much. And then, yeah, new week opening gap. That's pretty much it. So that's all the new terminology. Hope that was helpful. And yeah, that's it. Liquid Levy, thanks so much.